Michael Arone is Chief Investment Strategist at State Street Investment Management. Mike, always appreciate having you on. You know, stocks may be due for whatever, but it doesn't mean they're going to do that, does it?
It doesn't, Brian. The foundation for this bull market remains solid. So trade's coming into clearer focus. It's not perfect, but we've avoided the worst outcome. Now we're throwing a little gasoline on the fire with both fiscal policy and monetary policy. Oh, and by the way, earnings are growing by double digits, and analysts keep increasing their expectations for those earnings. The U.S. has never had a recession when earnings have been growing year over year. So there's a lot to be thankful for as we head into a difficult seasonal period, but certainly risks are rising as well.
Well, we don't know what's going to happen with this potential partial government shutdown like we just highlighted. But it sounds like, Michael, because earnings continue to go up, that may be one reason that the markets have kind of treated this with a yawn. I mean, we're down a little bit today, down a little bit last week, but overall, markets not really reacting to this.
Government shutdowns historically haven't meant much to markets or the economy. Brian, the last 6 shutdowns, GDP actually expanded. In 11 out of the last 12 shutdowns, GDP expanded. And in the last 5 shutdowns, Brian, the S&P 500 has actually climbed. So ultimately, this tends to be a big shrug of the shoulders from investors. So I do think earnings are going to be the big story. That's coming up in a couple of weeks in terms of the heart of earnings season. The consumer continues to be spending, so that's good as well. And we're going to enter a seasonally positive time for markets if we can just get through October.
How is it that the economy continues to go up when you have hundreds of thousands of people and indirectly and directly who may not get paid?
It's an odd question here, right? And ultimately, what we tend to see is a bit of a pause, some short market volatility, and then a rebound, kind of a catch-up period is ultimately, I think, what happens. Let's remember, we're starting from a pretty good starting point. Unemployment rates at 4.3%, continuing claims after they increase some have also started to cool, meaning companies continue, at least private businesses, continue not to lay off workers. And overall, the average shutdown, 8 days. This feels a little bit more like 95 or 2013. Those were 21 days and 16 days respectively. As was mentioned earlier, there's no natural catalyst here for this to end, but I think it will be short-lived and investors will move on. There's probably other greater risks that could threaten this bull market.
Okay, I want to hear what those risks are, and I'm going to ask you one and tell me if you think it is a risk. I do, but nobody else seems to, so maybe I'm insane, but, you know, we've known that for a while. The Supreme Court is going to decide if the tariffs are legal or illegal. I think that's November 5th or around there. We should get the ruling. If tariffs are found illegal, and basically everything we talked about for like the last 9 months is just kind of tabula rasa, wiped clean, is that a market risk?
Potentially, Brian. I think the way that this shows up, and we got a glimpse of this when the appeals court deemed that what Trump overstepped in terms of IEEPA. And so if the Supreme Court affirms that decision and we have to return some of the tariffs or refund them, you saw the biggest impact was on long-term bond yields. They climbed. And of course, that can prove problematic for the markets. And they climbed because there was fears that there wouldn't be revenue offsets to the One Big Beautiful Bill Act. So I think that's the way it manifests itself. But you can see here in some of this frenetic kind of trade policy that's happening in real time over the last week or so, that the Trump administration is laying the foundation should the Supreme Court rule against them to pursue other avenues on the tariffs. It'll just induce some market volatility.